We're joined in studio by Kush Bora and Parag Thakkar as always at the start of the week. Gentlemen, thanks as always for taking the time. Kush, you're looking like you're having a lot of fun in the recent past. It's red because it's the red of Dashera, no? It's not, you're not paying attention to the market too much.
तुम्ही तो नहीं थे जिन्होंने short किया था Kash. Kash. No, but before that, I mean, one reason for this smile is what happened last night, right? Yeah. With the Asia Cup. But what more can I say that you guys haven't already, except that this was such a convincing, thumping win, right? So we've had a tournament where we won all the matches, and if any team needed any convincing, we beat them not once, not twice, but thrice. So a comprehensive performance. And the only fault, perhaps, that you can find with Team India is toying with the other team's emotions, right? So first you raise their expectations and then just bring them crashing down. So that's the only thing, but other than that, kudos to Team India. Now, speaking of toying with emotions, FIIs are on a roller coaster ride, of sorts of their own in the Indian markets. We've had 3 good weeks of gains, and then the last week they sold quite heavily in the cash segment, and that's a bit of a worry. There was a bit of short covering, but now at higher levels you've seen heavy selling. Momentum on the downside is strong. Near-term indicators are suggesting that there could be a rally. I'm afraid that most of it might be captured in the gap up. So what do? You hold up. You don't create fresh long positions in this market, at least the positional ones, right? Until 25,000 is reconquered. You could play for short covering bounces, mind you, but that could be with small quantities and tight stop losses. So on the whole, this is still a market where the downside momentum is strong. You play only for short covering bounces. Just one quick word. The first real sign of strength will return when you see the negation of the lower high, lower low formation that has been going on for the last 6 sessions. So just keep an eye out on that. But on the whole, as I said, downward momentum strong. Play only for short covering bounces till 25,000 is conquered.
Okay, so you have a positive view there from Kush this morning. What are the top picks?
Sure. Just before that, a quick mention on India Wix, something that we've been discussing for some time now. Yeah. And if you'll recall, last week what we discussed was if India Wix were a stock, then the risk-reward ratio on going long on India Wix would be extremely favorable. We've gone from 9.5 there to about 11.5 now, right? And it's still trending higher. So just a word of caution on India Wix and how the markets correlate to that. As far as stocks go, Monday, so we have a weekly pick. Today we've got Lumax Auto. Look at the moves that it's made over the last week. While all of the markets have, seen a fair bit of correction, this one's actually gained ground on the back of good volumes. This was a slight late entrant to the entire auto ancillary party that came about, but a good one now. Now, with the kind of accumulation and the momentum and the relative strength that you've seen, 1365, 1425 are your targets on the higher side. 1225 is where you place that stop loss. The other stock also is a long trade, by the way, and I'm going with strength, and that is L&T. It's not given you fantastic returns, but the margin of safety on this one is fairly high, and it's now starting to show signs of a breakout. So 3800, 3885 are your targets on the upside. 3650 is where you place that stop loss.
On L&T, I think there's a note today from CLSA also, since we're just speaking about L&T. CLSA has maintained an outperform with a target price of 4,320 crores, saying there's an exit from the problem child because they will be exiting the Hyderabad Metro Rail concession at enterprise value of $1.7 billion. So there is a reason why fundamentally that stock will also perhaps look good. They say they're set for a special dividend to pay out its surplus cash to achieve its 18% ROE goal in FY26. They believe L&T remains relative value among India's industrial companies and is a key India and Middle East Capex cycle to play. Parag bhai, your view first on L&T as we start.
So L&T, I'm being always very positive. In fact, in many of our earlier conversations also, I have told that I want to play the Capex cycle through L&Ts of the world. And because L&T is around 5.5% of our portfolio, it has remained so. In fact, we have always added on dips. And we continue to like the stock. It is trading at only 24 times FY27 earnings. And for any other cap goods, you pay 40, 50 times actually. While this is a large cap company where you participate in entire Capex theme of India, plus now Middle East also. And so I think it is, and they are taking all right steps to reward minority shareholders also, right? For example, this Hyderabad Metro sale, it will add 4% to their EPS. So definitely stock also went up by 2-3% on Friday in a weak market. So I would say that L&T is a very good buy to play the entire Capex theme of India, plus Middle East also.
Just a follow-up on that, from your perspective, what's the one thing that you would like to see? Because I think execution is something everyone's focused on. The order book is not a concern. It's huge. So you need to see that getting executed fast. Is that something you're looking at?
So basically, see, they have guided for a order inflow growth of 10% and revenue growth of 15%. In my view, order inflow growth is not at all a challenge, as you rightly said. They're already sitting on 6,11,000 crore order when the last quarter ended. This quarter, we have seen huge amount of orders coming to them, both from India and Middle East. So I would say that that is not a challenge, and revenue also on Middle East front. See, in India, there can be some challenge due to this monsoon and workers not coming on the site and all that. But on the Middle East front, there will be no execution challenge in my view. So I think the result should be okay. I think only one thing where L&T slightly lags behind is margins. Because that is also because the Middle East margins are lower. That is where the working capital leakage is also lower, so ROCs are higher. So one has to take it from that perspective. When you execute Middle East order, your ROCs are higher, but your margins are lesser.
Another stock I think we should just quickly get your view on is BEL, and this is something that you mentioned as well. So the Indian Army has issued tenders worth 30,000 crores to Bharat Electronics to buy 5 to 6 Anant Shastra air defense missile systems. This will strengthen air defense along borders with Pakistan and China. Now, you know the fundamental story is going to pull up BEL in the last 1 week about 3% down, but I want to pull up the 1-year chart for BEL as well. Is there a second coming for defense stocks, Parag bhai?
Sure. So basically, HL, BL remain our core ideas. We don't deviate from there, and BEL of course looks a little bit expensive optically. So I would be a buyer on a bad day or a dips. HL we already hold in the portfolio around 2.5%. And these two stocks we keep on radar whenever there is a decline, there is a big fall in the market, we generally would like to buy these two stocks.
Okay, but for now it seems expensive.
Yeah. It seems expensive, but because it's an early cycle beneficiary, so of course market will pay some premium.
The question, Parag bhai, is that if we look at the current structure, right, autos, defense, from an ordering perspective, right, seem to be the two best placed sectors, right? Defense, we know orders are happening left, right, center, especially after Operation Sindoor. We've seen allocations as well, and autos has that budget, the GST benefit, and we've seen the telltale signs there, right? So, is there something else in defense that you would bet, therefore? If not a BEL and you find it expensive, I know you said that you want to play the Capex cycle through L&T. How do you play the defense cycle, if at all?
HL and BEL are our bets.
Only those two?
Only those two.
Nobody,
I don't want to
other.
venture into new names, you know, where, because where PE multiples are too high and the story might be exciting for 1 or 2 quarters, but it might fizzle out.
Okay.
And of course, see, as we spoke last time also, auto and auto components, we played it through Maruti, Hyundai, Mahindra, TVS Motors, Motherson Wiring, Mindacop, all kind of stocks. And now we have shifted our focus to financials as a second order impact. And ICICI Bank, City Union Bank, SBI, PNB are the stocks which we have added significantly in last 1 week.
Just to drive home that point, you mentioned your weightage of L&T. You want to talk about the change that you've seen in the weightage for auto and towards financial?
So basically we have booked profit in auto, and because we saw that, the near-term news flows in auto are extremely positive.
What did you exit in auto?
So we have booked profit in almost all the stocks.
Maruti.
All the stocks.
Maruti.
But
I remember Maruti was one of your big bets.
We have booked profits in almost all the stocks because we wanted to buy financials. We want to now play a second order impact in the second order. See, for example, if you see Q2 will mark the bottom of banking and financial sector results because margins will be under pressure because of the repo rate cuts. And growth was anyway not there. It was monsoon. It was not great quarter in terms of growth. But from Q3, I expect a significant recovery led by GST cuts, of course, the interest rate cuts and the income tax slab increase. And then Q4, there will be a Capex cycle coming back. So I am very bullish on financials from here on.
Across the board, not
and
just retail
in Q2,
lenders.
the margins will bottom out for sure. So unless there is another rate cut.
So I'm saying not just retail lenders, you're going across the board.
So starting from say ICICI Bank, which is the best, the most consistent compounder, say City Union Bank, where we feel the margin compression will be minimum because 28% of the gold loan book is gold. PSU banks, where again we feel that margin compression will be minimal, like SBI, PNBs of the world. in Q2, and from there the growth will also pick up in Q3 and Q4.
Okay. Okay, we'll circle back to some of these in more detail, and we'll perhaps get you some view on some of those stocks on the charts as well. Kush, get those charts up and running, because right now we have to deviate from that. 8:45 is when we bring you everything that is buzzing in the dealing rooms. And Soumit Sarkar joining in as always to talk about herd on the street. Morning, Soumit.
Good morning, Alex. So dealers are not quite enthused about the markets, given the fact that whatever gains they had seen in the early part of the month has all been wiped off in the last couple of trading sessions. So that is one thing that we need to focus. And secondly, if you look at, there is not many stock specific action, but few stocks that dealers have highlighted in my conversation. Firstly, it was Chennai Petro, and dealers indicate that there are buy flows on large HNI desk, and this is largely because of the uptick that we have seen when it comes to the gross refining margins. In fact, over the weekend at one point of time, gross refining margins had surged up to $5.8 per barrel. They have cooled off a bit from that level, but again, it has increased on a sequential basis that we are seeing. On a month-on-month basis also, it has increased. When it comes to Bharat Forge, dealers are saying that there are some buy flows that they're seeing at lower levels, and they're expecting some passive flows also to happen today when it comes to Bharat Forge. For Bajaj Finance, again, there are sell flows on DI desk. Dealers indicate that the Q2 quarter update could be quite weak compared to what the street has been anticipating. The street has also already expecting that Q2 would be weak, given the fact that there was not too much offtake even in consumer durable segment, but they are saying that the number could be much more weaker than what the street is currently anticipating. And lastly, when it comes to Aditya Birla Capital, there are buy flows at FI desk at lower levels for this counter. The counter valuations is quite not that quite expensive, is what dealers have indicated.
Aditya Birla Capital, that's one interesting one for sure. Sell flows on Bajaj Finance, not surprised. The beauty is Bharat Forge buy flows at lower levels, because when you look at the kind of carnage that happened in mid-cap and non-Nifty stocks on Friday, Bharat Forge was down only 2%, so not a very sharp gash.
And there would be some passive flows today as well.
Yeah, so keep an eye out for those. Okay, thanks Soumit for that. Kush Bora, out of this list, Bharat Forge was interesting for me. Maybe Chennai Petro was interesting for me. Since you're in the buy mode, I'm thinking of those two for you.
Very interesting, actually. Bharat Forge is interesting for me because for 5 sessions of downticks, Friday it closed at the low point of the day, and Soumit saying that there could be passive flows coming in. I will definitely have this one on my radar. For me, support zones of that 1150, 1155 zone remains critical. If that is maintained, you could see some sort of a pullback on this one, so very interesting. And yes, you're right, Chennai Petro, very interesting. This one has held its ground. It had a shot in the arm, run up quite a bit, late August, early September, and now it's consolidating. So relative strength is there. This could be considered on the long side for positional targets of 800, stop loss around the 745 mark. So the risk-reward ratio fairly attractive. AB Capital, after a good run, consolidation, some profit booking, comes at the support level. So with the stop loss around the 265, 260 zones, for higher levels of about 295 and 310 can still be considered. I think this one is just consolidating after a big run that it had in the last 6 months. So I think these two names from the long side, very interesting. Bharat Forge, I will keep on my radar, but I want key levels to be taken out on the upside before I initiate a long trade on Bharat Forge.
Just one thing, Parag bhai, we know that oil prices have flared up in the last 5-6 sessions as well. Even when they were lower, it was a net positive for Chennai Petro because of their refining margins, much higher than Singapore margins. Now that oil prices have flared up, that's a bigger shot in the arm. Are refiners like Chennai Petro good to look at?
Yeah, so I feel that BPCL is the better one.
But that's an OMC will get hit because of the higher crude prices.
No, but the point is that, see, again, Trump doesn't want oil prices to go up because that pushes up the inflation in US higher, right? Okay. So there is constant pressure on OPEC to increase production. So I don't expect big flare up in the oil prices, except that something happens on the Russia oil sanction front. But I don't expect a big jump in oil prices. And yesterday, as Tamanna was pointing out, this government's focus on creating value for energy companies like BPCL, HPCL, IOC, ONGCs of the world, there was a very clear intent in that. So on one hand, you have a government intent to unlock value. You have a stock which is trading at 8 PE, 3% dividend yield, only 1,40,000 crore market cap. Last quarter EPS was 15 rupees and stock price is 324. You have, so there is all the more probability of higher dividend also. Plus you have oil prices which will remain lower, or say below $70, I would say. So I would say that
I want to share one anecdote from the on-record off-cam meeting with the minister, and the top brass of the entire industry was there. All the CMDs of HPCL, BPCL, IOCL, Engineering India, all over there. And they've been making the effort to speak to the analyst community and business journalists just to give their point of view. So I won't name the company, but the minister did say that I don't understand the markets, rewarding valuations of a company that has barely been making profits, huge losses, and is in the quick service, quick commerce space. Meanwhile, look at the profitability of our companies, and why is there no valuation?
Actually, I am also completely in that camp.
There are a lot of tough questions were also asked that, will you really have an arm's length? Will you actually let fuel prices be changed on a daily basis? What about a subsidy under recoveries? All of those were answered as well. Just want to go through that note that Morgan Stanley has put out, where they say government focus on improving market caps for the energy SOEs was clear. Policy direction is less interventionist with heightened focus on quality of Capex and unlocking value. Management teams are being looked at to be more medium to long term. Cross-holding reductions among SOEs. Stable fuel, this is state-owned enterprises basically. Stable fuel pricing, cooking gas in recovery. There was also another question that we pressed on, which I think may be of interest, that obviously they're very clear, no divestment. At all. But what about reducing government holdings or raising money or any such kind of move? They have not ruled that out. But yes, they will not be selling the family silver
right
anytime
now they are
soon.
all very, very cheap. They should not sell stake in these companies. They are very, very cheap right now. But once they get their due value, then they can...
Is it a buy though? Is it a buy though?
Yeah, so I would say, see, I am a person who bets on government's intent. So when government did that GST cut, I reduced my cash level. I bought into financials, as I said. When now government wants to create value in energy companies, definitely I would like to bet on.
Parag, I'm sorry, playing the devil's advocate. They've spoken about this for the last 4, 5, 6 years, right?
Yeah.
Deregulation, etc. And when the time came, there was a move that was made that was anti-deregulation as well, and which is why these stocks haven't created wealth. Let's face it. They've always been value guys, right? I mean, the question is, are they value trap?
No, this time I think...
Why is this time different?
Why this time different? One, because there's a clear-cut direction from Trump that oil should not go up. So, see, last time when they blinked, oil was at $84. And that is the time they were told to bear 1 rupee subsidy. And, all the stocks were down 20%. Right. So oil was at 84. Now it is 67.5. So that's okay. There is a long way to go. And I don't see, unless there is a fresh sanctions on Russian oil, where Europe cannot buy Russian oil, we cannot buy Russian oil. And in that kind of scenario plays out, I don't see oil rising too fast and too soon. And that is a big positive for OMCs, and especially when government also wants to create value in those kind of companies. Plus, they've also said, I think, which is a positive for ONGC and Oil India, that they have also said that even if oil goes up, there will be no windfall tax this time.
Okay. On the
so
topic,
the entire, I would say, government's lens is changing completely.
Okay. But I wanted to know your view, Kush, about any of the defense pack, and also a quick word on HUL. Let me pull up HUL for you in the pre-open session, and these rates will settle. But a bit of a downer there, even as we start off, as we predicted.
So as far as the defense pack goes, I think we've maintained this, that the risk reward ratio for a positional trade is very, very favorable, and the price action is also starting to inch higher and reflect that. BEL is a portfolio stock. You hold this. This one didn't correct as much, I'm sorry, as the rest of the pack when the entire pack was falling. So this one you buy and hold. Then you could have momentum plays as and when the news comes out, right? So you've got the shipping counters that have done well, something like a data patterns that moves higher. But the two stocks, and I completely agree with Parag Bhai here, BEL and HL are the two stocks that you should always have on your radar. Amongst that, BEL is the one that I would keep in my portfolio. FMCG as a pack has actually disappointed. It had that shot in the arm, ran up, but the profit booking in this one was much bigger, much deeper, and much sooner even than the auto packs. So for me, this is a space that you'd want to avoid for now, unless you see some sort of supports coming in, some sort of revival happening. Like I've maintained, other than Tata Consumer, or maybe if I go a little divergent, then something like a Radico Khaitan. Other than some of these names in the consumption basket per se, most of these FMCG companies not doing well. You see the action, the pressure on the price action as well. You might want to wait out before you go out and buy these, even from a positional standpoint right now.
Okay. What about in, Marico, etc.? You're going to see a spillover effect today from an HUL, but a Marico and Godrej consumer. I want to come to you, Parag Bhai, on this. And, views on what we've seen from HUL statement coming in, that there is going to be some pain as the GST cut transitions come through.
So I think, so September quarter, you will not see any big growth and in fact, flattish growth only. There are many reasons, right? One is this GST, so people postpone their buying. Second is, of course, the input tax credit issue at the distributors and wherever the GST cut has been very big. For example, HUL, 40% of the portfolio has seen a GST cut. So Dabur, very good big portion of the portfolio has seen a GST cut. So and plus there were floods in North India in August. Plus September also has seen some very heavy rains in some parts. So I would say it has got but I think the price points are becoming very interesting. So I would be very closely looking at HUL, Dabur and Marico's of the world, not to buy from a 1 quarter perspective, but from a 1 or 2 year perspective. I think the prices are becoming very interesting.
But not quite now.
So gradually, you have to, phase out your buying gradually.
SIP approach.
Yeah, SIP approach kind of thing.
Interesting.
Yeah. So as Kush said, auto has just boomed because in Maruti you saw fantastic inquiries and sales happening before the GST cut, Maruti and Hyundai small cars. So that is where the stocks have rallied. Here, because it was not seen on the ground, the demand surge, the stocks have been selling off.
IndusInd Bank seeing a bit of an uptick, and I think that's you're not seeing too much action in the pre-open session, but that's quite a pivot. Parag Bhai, IndusInd Bank, and then let's focus on the big boy in the pack, ICICI Bank as well. But let's start with IndusInd Bank.
So IndusInd, I'll give it some time. I'll give it some time. Rajiv Anand is a great guy. He has come. Let him settle down and let, because we have seen a lot of things happening in IndusInd Bank. So I would like to wait and watch. Coming to the big boy ICICI Bank, it is as I always keep saying, Mr. Sandeep Bakshi is a magician in my view. So after he has come, ICICI Bank has never disappointed. It has always done, always outperformed expectations, and even if in this time, in spite of 100 bips rate cut, which would have definitely caused margin pressure on banking, and other hand, the demand side, demand for money was also not there because economy was not doing that well. Even in this kind of scenario, ICICI Bank has managed its margin reduction to only less than 20 bips. Even after 100 bips rate cut, that too when the margins were already at 4.3%. Right, so when you are at the, I would say peak of the margin, still your fall in the margin is lowest. See, for example, SBI is making 3% margin. If SBI margin drops by 10 bips, it is equal to ICICI Bank's, because they are making 4.3% margin. Right. So in a percentage terms, ICICI has made it phenomenally well. Plus now they are confident of growing personal loan and credit card loans from the festive season. So Q3, Q4, high yielding loans will increase. Plus now mortgages also, there is a reduction in competition from PSU banks because the rates between rate of ICICI and SBI are now converging. So I think all levers are there. They have a 86% CD ratio. They can grow their book. They have 16% tier 1 capital. Cost of fund is only 5% because they have a fantastic CASA franchise. So I would say that this fall, because of FII selling, is giving a fantastic opportunity to own this quality franchise. In fact, now we have made it a top weight in our portfolio in last week's fall. And we were at only 1.25%. We are waiting for this kind of a fall to make it a big position in the portfolio, and we have made it in the last week's fall.
Interesting. Kush Bora, can I ask you to supplement that with 2 stocks? One is ICICI Bank. Parag Bhai is really convinced there. But 2, he mentioned about card spends, etc., right? And therefore, I was looking at statistic wherein the credit card spends are up 5-fold in the last 3 days alone. So therefore, an ICICI Bank and SBI cards, etc., do they feature in the list of tradable items?
I'm afraid not.
No. Okay, fine.
Just
which is fine.
Quick word on IndusInd.
Okay, yeah.
Quick word on IndusInd Bank
well,
also.
Yes.
This stock hasn't participated when the bank Nifty was doing well. So when the entire sector is doing well, if the stock doesn't participate, it becomes very difficult to get a convincing buy on this. So I would wait up on any purchases on IndusInd Bank. Just a quick word on that. ICICI Bank, HDFC Bank. My issue is one word that Parag Bhai also mentioned: the FII selling. Favorite counters for foreign investors. As long as they continue to sell, the upsides on these will be limited, and you're seeing these stocks slide from mid-July, late July, and the recoveries haven't been as meaningful. Right now, ICICI is testing the 200-day moving average. If this is broken, then you're seeing a gap around the 1325 mark, which could come into play. So from a long-term perspective, yes, these are great levels to start accumulating. But if I were to trade, I would wait and watch, on likes of ICICI, even HDFC for that matter, and SBI too. Had a good run, but you're seeing selling pressure at higher levels. So 845 is the support zone. It could perhaps consolidate around that time. Not enough momentum to say that, you go out and buy right now.
Okay, just a quick look at how the pre-open rates have settled. And just about 2.5 minutes to go for markets to open this morning. I think you're going to see, because of the Tata Sons IPO and Tata Capital also coming in, Tata Investment is showing some action today. Eternal is back in focus with a bit of a pop. Tejas, Aavas Finance and Jubilant Pharmova are your top 3 gainers. Anant Raj, watch out for. We're hearing that there could be an incentive scheme coming in for data centers, and especially GCCs being set up. That is a space in which Anant Raj is, so watch out for that this morning as well. HUL is something that I want to see. Tata Motors has announced its management changes, which were in place, but now there is a clear timeline. So that is one you should watch out for. Tata Motors about 1.5% and even more ahead. Hero Motor is something that we will be tracking. We've done an exclusive story on how they expect the Diwali sales to zoom, those rates not reflecting yet. And apart from that, I think IndusInd Bank is another one that you should see this morning after that equal weight rating coming in from Morgan Stanley. That's about 1% up as well. So any top picks after the pre-open session, Kush?
So a couple of stocks that I like. Axis Cades is something that we had discussed as a weekly pick, did phenomenally well, all targets hit. After a brief period of consolidation last week, starting to look up. So that's on my radar for, much higher levels of 1780 and higher, and supports at 1620, so risk reward ratio fairly favorable. And the weekly pick for today that we discussed, Lumax Auto, opening with a gap of about 2%. If that is sustained, I think there'll still be a good risk reward ratio for eventual targets of 1450.
Axis Kids because I think there should be a full disclaimer because you have talked about Axis Kids non-stop.
So I don't usually trade in stocks that I recommend because that's like conflict of interest and all of that, and I have to give a disclaimer. But no, I don't have holdings. I'm just happy that the viewers are making profits.
So you're not convinced about your own idea?
No, it's not that. It is conflict of interest. If I start trading on my own ideas, I'll be busy trading rather than finding ideas.
I'm glad you said that because we want to highlight over here that we work for you and for your profit here at NDTV Profit, and that's why we will ask even our own analysts these questions very clearly.
So let me ask you about a few of these counters, Kush, that are not necessarily moving on the back of news flow, something like a Sammaan Capital or something like a Tejas Network. Would you buy into these?
No, Tejas, I would wait up for now. Heavy selling, probably some kind of recovery from oversold levels. But very excited about Sammaan Capital, and let me also add an LTF to it because time and again, the 2 stocks from this space that I've mentioned are Sammaan Capital and LTF. We've given calls also on the channel, as far as these stocks are concerned. And very specifically, did I say that, Sammaan Capital at the current juncture, around 130, 140 levels, also a good entry point. LTF should be bought at declines. And you did see that kind of profit booking. LTF went from 250 to about 235 and now is starting to gain ground. This is a good time to accumulate stocks like LTF and Sammaan Capital. Tejas Networks, as I said, you might want to just wait up a little more. Massive underperformance, some recovery from oversold territories. Wait for this to turn into a trend before you re-enter.
Okay. And IT as a pack is up about 0.5% today in an otherwise pretty lackluster market. Some of the large caps moving up. I'm wondering, Parag bhai, we haven't spoken about this today, and we spoke last week when some of that drubbing was taking place. The index as a whole ending the week with cuts of what, 7% or thereabouts. Any opportunities, or would you wait on the sidelines?
So right now I have taken a bet on financials, as I said, ICICI Bank and all, because if you see PEG or price to book by ROA, everything is now at this price looking very, very comfortable for a 14 to 15% compounder. In IT, I'm not so sure about the thing because, as I said, there are 3 headwinds, right? One is delay in decision making due to tariff uncertainty. Second, which is most worrying, which I don't understand fully in depth, is this deflationary impact of productivity gains being passed on to customers due to AI. This is where, if I get a proper answer from a company like Infosys or something, then I'll form my view, which will be very clear view. And third one is now H1B visa, which is more of a sentimental thing, I would say. But the second worry is the most important worry, that if you have to pass on your productivity gains and your revenue reduces. For example, one of the brokerage house pointed out that every year 3% there will be some reduction in the revenue. So that is what is worrying me, and I was more clear about financials growth in second half. So I have tilted my weight towards financials like ICICI Bank and City Union Bank and SBIs of the world.
And to get that clarity, it's just going to be another couple of weeks where you're going to have the earnings season start again. But Kush, very quickly, gains of only about 0.1% for the Nifty 50 at this point. So your challawa comes into effect again, is it?
Oh, absolutely. After a while.
Flatter to deceive.
After a while, that word makes a comeback, right? The chalawa, the 100 points gap up Nifty, GIFT Nifty gap up that we were looking at. But Alex, it's not such a bad move, mind you. If I did have a long position, or if I did create one this morning, I would keep Friday's low of 24,629 on in the cash segment as the low, as my stop loss. If that were to hold, you could see some short covering bounce, meaningful bounce, at least of about another 100 points or so towards 24,800. If that is broken, exit, because this downward momentum, as we said, could continue. But I prefer this kind of a move where you've got room on the upside rather than 130 gap up, 130 points gap up, and you can't do much from there on.
Okay, couple of movers this morning. Look at Suntech Realty. They're launching 20,000 crore worth of ultra luxury homes in Mumbai and Dubai. I find it very interesting how Dubai has become an extended investment move for those who want to put in realty. And if for 400 and what was the number? 430 days.
430 days.
430 days, you're seeing no, no returns on the Nifty. Then people are going to look at everything else, including realty. This beats the 2% that real estate gives you, no?
But a friend of mine who lives there and is in the real estate business, Dubai, told me a statistic that the majority population in Dubai is now Indians.
Really?
Yeah, majority as a this thing. Indians.
I wouldn't be surprised.
Yeah.
I wouldn't be surprised. Anyway, so Suntech Realty, one way or the other. If you can't buy the home, then buy the stock. So you have all options, 428 rupees on it. Vascon Engineers has signed a 5-year MOU with Adani Infra as execution partner for their Mumbai projects. Look at Vascon Engineers, that stock about 12% up. The other one that our head of research, Hiral, has marked out is Dollar Industries. Also, they've announced a strategic merger of 9 promoter groups into listed entity. Wow. The proposed merger will consolidate certain promoter group companies into the listed company. That's 6% up as well. We should get a more detailed piece on that, understand what exactly Dollar is trying to do in this space. Let's talk a bit about Suntech Realty and what you see over there, or anything in the real estate space you're looking at. There's some news on Brigade as well about, I think, land that they have acquired, and a new land parcel may see some action in the stock as well. So let's pull up Brigade and your view on any of these, Kush.
I'm afraid these are still wait and watch, because you see the kind of drubbing that they took for the last 10 sessions. Still, even now, despite being close to support levels, you don't see that kind of attraction coming back. Suntech Realty stands out because of the news that has come out. But other than that, look at Soba, look at Prestige, look at DLF. You're still seeing that kind of pressure on the back of fairly decent volumes. So while the risk reward may be favorable, you just want these stocks to take support and show some kind of a rebound before you enter. So I wouldn't take a contrarian bet just yet. Let them give that uptick, and then perhaps you consider that trade with a tight stop loss. But for now, these are wait and watch.
The other piece is the shipping companies, and you saw that big boost in them of about 70,000 crore rupees. That was the size of the package that was put in, and NDTV Profit had that exclusive conversation with the shipping minister, Sarbanan Sonowal. Some of them coming up at Garden Reach, Cochin Shipyard, all of them moving in. The sense you get, and we'll play out a bit of that interview, the sense you get when you speak to the minister, you hear what he's saying is that there is a very clear intent as part of the whole Atmanirbhar POV to increase our capacities. And interesting statistic that he shared in the entirety of that interview, 95% of India's EXIM is right now on foreign ships. We don't have our own ships. So if you really want to, in this geopolitical landscape, become Atmanirbhar, you need that as well. Any of the shipping majors that you see as a fallout of, it's not the defense pact, but that entire space where there is government push coming in, Parag bhai?
No, up till now we have not invested.
You've not touched anything in shipping?
No, we have not touched anything. I would like to say because the multiples are too high, so it is too difficult for me to buy Muscat Dock or Cochin Shipyard or something like. In fact, I am a big lover of PSUs because the government's clear intent is that to create value, but from conventional valuation metrics point of view, as I said, the OMCs look attractive, NTPC kind of stocks look attractive, but the shipping stocks and all. And see, there is a recency impact. You know, everybody gets excited with this new high value order thing, but you know, you need to see execution, you need to see numbers.
What is the percentage, Tamanna, you said about that is a part of EXIM?
95% of Indian goods come and go on foreign ships. Not on Indian ships, and the target is very clear. We are 16th in the world right now in the shipbuilding industry. By 2030, we're supposed to reach the top 10. By 2047, the top 5. Right now, shipping has moved in its entirety from the Western Hemisphere to Asia. South Korea and China dominating, that's where India wants to be. So there is a complete push in terms of subvention schemes, in terms of you know, encouraging shipbuilding, partnerships with other countries. I think Cochin Shipyard is a partnership with a South Korean company as well. So just that space was interesting to watch.
No, and also the fact that while this is talking about India's shipping or trade through shipping, globally, the fact is that trade will continue for the foreseeable future to be carried out via shipping. But beyond that, let's take a look once again at the benchmark. You have gains of about 0.2%, so settling around that mark. But specifically, if you were to be asked on HUL, Kush, we discussed this at the start, it is the worst performer, 2.5% down. How do you trade this, if at all?
I would avoid. I mean, the time to short is gone because the risk reward ratio not favorable on the downside. 2400 is a 200-day moving average support zone as well. But on the upside, you know, if it does kind of see any kind of short covering bounce, then you've got 150 points of jump that could come in. Not saying that it is the likely scenario, but you avoid and you wait and watch. In fact, that's the view for most of the FMCG pack. Haven't done well. As I said, they were the first ones to see sharp gashes of profit booking after the GST announcement came about. The run-up was there, but then the profit booking also came about first and equally sharp. So you wait and watch on a lot of these names.
In terms of the technicals, since we got the fundamental view on a Garden Reach, a Cochin Shipyard, an SCI, they saw their bump up and then, of course, a pullback as expected.
So while this might be an interesting point to enter some of these names, Garden Reach stands out that way. Had a good run, one round of profit booking. Actually, it's a very healthy sign. So with a positional stop around the 2550 mark for the recent swing highs of 2800 and 2950 Garden Reach. But I would actually focus on SCI from a positional standpoint. On the verge of a breakout of a cup and handle formation around the 235-240 zone, still some distance away, slightly preemptive. But if that comes about, you would see a sharp up move to 275 and 395 kind of levels. So this one is setting up beautifully. As I said, slightly preemptive because that zone 235-240 breakout zone is some distance away. But you've seen good volume accumulation. The stock is consolidated enough and more. I think that upside could come about. So if you want to take a preemptive bet, then with a stop loss of about 200, 195, you could enter. Risk reward ratio even after that breakout level is very, very favorable.
Okay, well, so keep an eye out for these, but well, Parag Bhai, Kush, thank you so much for joining in today, as also every Monday morning, and talking to us about all the key facets of trade today and for the near term to the medium term. Well, you get all of that advice on NDTV Profit every single day, and on Mondays with these gentlemen.